the golden cross, SMA50 crossing above SMA200. It is one of the most famous signals in technical analysis. We backtested it across 500 stocks. The result, win rate, 35%, expected return, minus 0.85% per trade. In 2022, the bear market hit the stop loss before the take profit every time, so we gave Claude Code one job, fix it. 55 generations, 500 stocks, fitness 0.107 to 2.125. Here is what happened. Here is the loop we built to fix the golden cross. Claude Code writes a new signal function Python with the SMA crossover as the base. The evaluator runs it across 500 stocks over 9 years of data, 3 separate periods. In sample, validation, and a holdout period the AI never touches. It computes win rate and expected return on each. If the strategy clears the validation gate, it joins the population. The best strategy is mutated into the next generation. Repeat 55 times, close loop, mutate, test, gate, select. Fitness is one number. The AI tries to maximize it every generation. 3 parts. 60% comes from validation expected return, what the strategy earns per trade on data it was never trained on. 20% from in-sample expected return, and 20% from validation win rate. Out-of-sample data is weighted 3 times heavier than in-sample. That punishes overfitting. The seed scored 0.107. The champions scored 2.125. That is a 20-fold improvement over 55 generations. Every strategy must pass 3 gates to join the population. 1. Validation win rate above 40%. 2. Validation expected return above 0, it must be profitable per trade. 3. At least 20 validation trades, enough data to be meaningful. On top of that, to become champion, a strategy must also pass 2 champion guards, 100 or more validation trades, and positive in-sample expected return. Miss any gate, eliminated. Miss any guard, cannot claim champion, even with high fitness. First, the strategy. A golden cross happens when the 50-day moving average crosses above the 200-day. It signals a long-term bullish trend is forming. The textbook trade, enter on the cross, set a stop loss at the 200 SMA, take profit at 1.5 times the stop distance. The 2022 problem, in a bear market recovery, price cuts through the 200 SMA from below and then pulls back. The stop fires before price recovers. The win rate collapses to 36%. That is the problem the AI needed to solve. Generation 1. The seed, the classic golden cross, SMA50 over SMA200. Stop loss at the 200. Take profit 1.5 times away. In sample, win rate 49%, expected return plus 1.9%. Sounds decent. Then 2022 happened. Validation. Win rate 35.8%, expected return minus 0.85% per trade. Gate, fail. Fitness, 0.107. In the 2022 bear market recovery, price cuts through SMA200 from below, then pulls back below it, firing the stop before the trade recovers. 2/3 of all trades are losses. The AI's first task, survive 2022. Every month, Backtest Lab runs our strategy across the entire market. 10 stocks make the cut. Each one gets a full research report, technical structure, social sentiment, news and macro and fundamentals. Then the following month we publish the verified 30-day returns. Every ticker, no cherry picking. The May issue flagged 10 stocks. The top 5 picks returned between 147 and 241% in 3 months. The letter is on Patreon. Link in the description. Generation 10 added an RSI exit. Close the trade when RSI hits 65. First gate pass. Fitness, 0.253. But the average winner was only 3.47%. Then Generation 13 tried something counterintuitive. Instead of changing the exit, change the entry. Only enter when RSI is below 60 at the time of the golden cross. If RSI is below 60 at entry, it must travel at least 5 points to reach the exit. That gap, RSI Headroom, forces the trade to capture a meaningful move. Average winner, 3.47% jumped to 6.09%. Fitness, 0.448. The insight, RSI Headroom at entry determines the minimum move you will capture. A golden cross can fire even when the stock has been falling for 3 months. SMA50 is above SMA200, technically a cross, but price peaked weeks ago. These are stale crosses. They destroy win rate. Generation 22 added one filter, 3-month return above 7% at entry. No stale crosses. No stocks already rolling over. Win rate jumped 6 percentage points from 43 to 49. Expected return, plus 0.91%. Fitness, 0.804. New champion. The Ret63d Filter, 3 months of positive momentum, kills stale crosses before they fire. From Generation 22, the AI explored every direction. Tighter entry at RSI 55. N drops to 85 below the 100 trade guard. Stricter momentum at 10%. Win rate 51, but N drops to 88. Stack 6-month threshold with 3-month. Extraordinary quality N69. Every additional filter hits the same wall. The strategy runs out of trades. Then Generation 29 found the sweet spot. Entry cap at RSI 56. Exit at RSI 67. Ret63d above 7%. The RSI gap, 56 to 67, 11 points of headroom. Validation trades, exactly 100. N-guard, pass, fitness, 1.103. The AI had found the maximum selectivity the data could support. Now comes the most counterintuitive discovery in the entire run. Generation 32 replaced the SMA200 stop loss with SMA150. Why would a higher stop, closer to price, be better? Here is why. In a bear market recovery, price is climbing back from a crash. The SMA200 includes prices from before the crash, prices that were much higher. So SMA200 is actually above SMA150 during a recovery. A stop at SMA200 is a tighter stop. A stop at SMA150 is a wider stop. The wider stop lets trades breathe through normal volatility. Win rate, 45% jumped to 58%. Fitness, 1.707. Then Generation 33 raised the exit to RSI 68. Fitness, 1.728. Prior champion. Generation 46 replaced the SMA150 stop with an ATR-based stop. Instead of a fixed moving average, the stop is now a multiplier times the 14-day ATR below entry price. Tight stocks get tight stops. Volatile stocks get wider stops, adaptive to each ticker. ATR multiplier 2, fitness 1.792, multiplier 2.5, fitness 1.981, multiplier 3, fitness 2.084, multiplier 3.5, exit at RSI 69, fitness 2.125, win rate invalidation, 49, 56, 60, 59%. Multiplier 4 fails, one ticker has an ATR larger than its close price. N drops to 99. Eliminated. 3.5 is the ceiling. Generation 52. The champion. Enter when SMA50 crosses above SMA200, RSI below 56, 3-month return above 7%, 6-month return above 0. Exit when RSI hits 69 or the ATR 3.5 stop fires. In sample, win rate 58.78%, expected return plus 3.36%, 148 trades. Validation, win rate 59%, expected return plus 2.23%, 100 trades. Holdout, data the AI never touched, win rate 58.7%, expected return plus 2.14%, 46 trades. All 3 periods in agreement. Fitness, 2.125. Here is the full 55 generation run. Each dot is a strategy the AI tested. Gray dots failed the validation gate. Amber dots passed gate but fell short of the champion guard. Cyan dots passed everything. Gold diamonds are the 7 milestones. Watch the fitness climb from 0.107 at Generation 1 to 2.125 at Generation 52. If this is useful, subscribe. New backtest every week. Seed versus champion. Head-to-head. Classic Golden Cross, win rate 35.8%, expected return minus 0.85% per trade. Gate fail. AI champion, win rate 59%, expected return plus 2.23%. Gate pass, from minus to plus. From 36 to 59. 5 conditions added. Stop type changed. Stop width calibrated. The holdout confirms it. 58.7% win rate, plus 2.14%, on data the AI never saw. Here is what the AI found. It did not find that the Golden Cross is a good signal. In 2022, the base strategy lost on 2/3 of all trades. What the AI found is this: the Golden Cross is only a valid signal under 3 conditions. First, the stock must have RSI headroom, not already overbought at the cross. Second, the cross must be fresh, 3 months of positive momentum beforehand. Third, the stop must be adaptive, wide enough to survive the noise, not anchored to a level inflated by pre-crash prices. None of these are obvious from the traditional textbook description. The original signal looks reliable because it is so simple. It is not. The conditions that make it reliable are invisible until you run 55 generations of evolution. 3 discoveries from 55 generations. 1. RSI headroom is required. An RSI below 56 at the cross is not a refinement, it is a prerequisite. Without it, average winners are 3.47%. With it, 10.48%. 2. Ret63d kills stale crosses. 3 months of positive momentum at entry is the difference between catching a trend and catching a bounce. 6 percentage points of win rate. 3. ATR stops beat price-based stops. SMA150 was accidentally wide in bear recoveries. ATR 3.5 is correctly wide across all regimes and all volatility levels. The champion. Enter on a fresh golden cross when RSI is below 56, 3-month return is above 7%, and 6-month return is positive. Exit when RSI hits 69. Stop at 3.5 times ATR. Subscribe to Backtest Lab for a new strategy test every week. The champion Backtest code is on Patreon, link in the description.